Hey everyone, it's Konrad Bobilak here, CEO of Investors Prime Real Estate and a best-selling international author of Australian Real Estate Investing Made Simple. Welcome to today's video on why the smartest investors are back in the market. And I'm going to talk about some of my most successful clients that are buying the 7th, 8th, 9th, 10th property right now in this market and have made lots of money in the last 24 months and 12 months. I'm also going to talk about the 10 top charts or fundamental drivers of the current property market as well. And I'm going to share with you some of my thoughts about the best suburbs that have performed in Melbourne in the last 12 months and which areas to target, which areas to avoid, and also just generally my ideas about the differences between investing in house and land estates, townhouses, and apartments. Because this time around, especially where we are in the property cycle, there's going to be a lot of opportunities to make money in the short term and long term. So welcome to today's video. I'm very excited to be here, and let's get into it. Now, before we get started, a bit of a disclaimer. Everything today is purely for educational purposes only. I'm not here to give you any financial advice. I've never met you. I don't know your financial risk profile or financial standing. So by all means, before you implement anything, make sure you speak to a professional, a mortgage broker, financial planner. But before you do, make sure they have the exact results that you want to achieve. Otherwise, there's no point talking to them. And the only guarantee that I'll make is if you don't do anything, you're going to retire asset rich, potentially asset rich, but cash flow poor, dead broke at 65, which is where the average Australian unfortunately ends up. We're the luckiest country in the world. And I'm seeing people retiring on $1 million in equity with no ability to draw the equity out, relying on the government pension, living a life of quiet desperation, which is not ideal. And you know what? People are living longer and longer now. I mean, I'm seeing people in my gym at 65, 70, pumping iron 5 days a week, taking NutriBullets. These guys are going to be living for another 20 or 30 years. So you've got to make sure when you get there, at the very least, you're going to have some quality of lifestyle. And that's what these videos are designed to do. My whole YouTube channel, guys, is just designed to teach you about where the money is, where the risk is, which areas to buy, which areas to avoid, and learn from other people's mistakes and from other people's successes. Because remember, success always leaves clues. A bit about myself. For those who have never heard me speak before, I've got a YouTube channel, which I do a video from time to time. I'm pretty lazy. I work a lot with my private clients, but also I don't actually work that hard, guys. I'm financially independent. I have 6 holidays a year. I work pretty much Monday to Friday, 10 o'clock to 5:36, pretty much, and I switch off. And I have no inclination of working anywhere beyond those hours, apart from the odd weekend event that I do speak at. So I am pretty relaxed with my contents. But if you go back to my videos, a lot of the topics haven't really changed in the last 10 years. Only the landscape has changed, or the fundamentals just don't change. I've also got a degree in real estate, mortgage broking, diploma of financial services, financial planning. The most important thing is, guys, that I'm a property investor myself. It's not about the letters after my name. It's the amount of money in my bank balance and the amount of properties that I have. I've got a multi-million-dollar property portfolio here in Melbourne that has allowed myself and my wife to live a very comfortable life. And that's why I'm sharing the information with you, purely just to give back. There's no vested interest, there's no agenda. I'm not a developer. I'm not pushing a particular suburb, guys. There's 480 suburbs in Melbourne. I don't need to make a suburb look better or worse than it is. It is what it is. I'm in the market all day long. I'm 47. I've been doing this now for 27 years, guys, at a very high level. And I get things 99% of the times correct. And, people ask you, why is so successful in predicting hotspots in Melbourne and predicting suburbs and growth patterns before they emerge? Well, if you've been in the same market for 27 years, okay, which is over a quarter of a century, guess what? You're going to pick up a few clues. So I'll be doing the same stuff over and over and over for a quarter of a century, which makes me feel very old. And you learn from the best, and I learn from the best. I hang out with people that are much more successful than myself and richer than myself, developers, accountants, financial planners, lawyers, property investors who have accomplished a lot more than I have, and I learn from them, and I give you all the information bundled up in these YouTube videos. I'm also an author of the Australian Real Estate Investing Made Simple book, which has gone #1 multiple times on Amazon and various other platforms over the years. In fact, I've been #1 and 2 many times. My second book is Australian Property Finance Made Simple, which teaches you how to pay off your mortgage in record time. So rather than spending 30 years on your mortgage, I teach you how to pay it off in 15 or less, depending on how you structure it and how clever you are. And once again, I really want to thank you guys for supporting me and buying my book. For those who have never bought my book, jump onto realestateMadeSimple.com.au. You can pick up my book and a bunch of free information, including an online video course, which I throw in for free, which is 10 hours of content. Or you can check out my book on finance.com.au, which is also available on my website. Or you can jump onto any good bookshop out there and check these out as well. So it's entirely up to you. Also, what I want to do, guys, just because you're here, and I'm a big fan of education, and I always tell people the difference between you today and 2 years from now is the books that you read and the people that you meet. If you don't change, nothing will change. And if you don't plan for things to happen, no one's going to knock on your door and make you wealthy, guys. People become wealthy by design. And yes, it's expensive. It costs time and money. And remember, time is more important than money, because you can always get more time. You can't get more money. And sorry, it's the opposite. You can always get money, but you can't get more time. And once your time runs out, that's it. So the most important asset that we have is time. And unfortunately, I see a lot of people run out of time to invest, to build up wealth. This is a long-term game that takes 10, 15 years to really unwind. You need to have at least 2 entire property cycles hit your portfolio. So my home study or my educational online video course, if you like, is normally worth $497. But if you stick to the end of this video, there'll be a download link. You can access that information immediately after this video and start educating yourself. And this information has took me decades to learn and implement. So it's priceless. I mean, how much can you put on that in terms of value? I mean, if you don't implement it, it's worth nothing. If you implement it, you can build a large property portfolio of 10 properties plus and change your whole financial destination. So definitely, as my gift to you, just for being here and supporting my YouTube channel, definitely stick to the very end, and I'll give you a download link for that. Now, interesting thing, if you watch my YouTube videos during COVID-19, I was telling people that the market's going to boom over the next 3 years. And there was a lot of people that were questioning me on LinkedIn, especially through private messages, saying, come on, Konrad, how can the market boom? How can the market potentially even go up? The real estate agents are all locked down. You can't do auctions, you can't do inspections, blah, 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 right? And all I said to those people is, look, you've got your degree, I've got my degree, I know what I know, you know what you know. Let's just do a bet. Let's just do a bet for $10,000. I'll put 10 grand in my solicitor's trust account. I reckon that Melbourne will do double digits in a particular period of time. You reckon you'll go negative? Let's do RP Data CoreLogic stats for January. Let's see what happens. And out of all the economists and all the so-called experts that were questioning me on LinkedIn, none of them had the balls to put 10 grand behind the name, which either means they don't have faith in what they're saying or they haven't got 10 grand. Both of those are really bad reasons. Anyway, eventually there's a number of them made a gentleman's bet with me for $1. And guess what? I won. They were wrong. In fact, since pre-COVID, the house prices have gone up by 40% in 4 years. And that's the median growth pattern collectively throughout the major capital cities in Australia. Remember, Melbourne, Sydney, and Brisbane is pretty much, 70, 80% of the value of the market. Now, yes, it's always a good time to buy at the bottom of the market. I always talk about it's time in the market, not timing of the market, because the reality is, I said many times before, what if you get to the bottom of the market? It's a magical point that you've been waiting for 10 years. And something happens in your life where you can't borrow the money that you needed to. Maybe your business went bad, your relationship went bad, or maybe interest rates have tripled and there's no good stock on the market, which is exactly what happened in November, December, January 22, 23. We got to the bottom of the market. I was telling people, this is the bottom of the market, okay? And guess what? Honestly, there was nothing exciting on the market to buy. So for those of you who think you're going to time the market, I have never met in 27 years any successful property investors that have managed to time the market correctly and exploit it as a strategy. Now, yes, it's nice to buy at the bottom. I've bought properties at the bottom many times, but I've also bought at the peak of the market, overpaying for properties because I knew how good they were. See, just like Warren Buffett, remember, and Warren Buffett says this all the time, he would rather overpay for a good stock than underpay for a bad one. And I'm the same. I have specifically been in auctions and bought properties where I've overpaid for them. I had negative equity for the first 2 years, but I knew that the next 10 years, those properties will catch up, surpass the negative equity, and then do double-digit growth for the rest of the time. It's all about quality over quantity, guys. Remember, it's about buying Rolexes and Mercedes, not Camrys and Seikos. There's nothing wrong with Camrys and Seikos. They just don't go up in value. They depreciate until they're worthless and nothing, scrap metal. So if your intention is to make money, which is what we're doing, we're here to make money out of property. We're not talking about owner-occupied emotional living. We're purely using it as a vehicle to make money. The most important thing to understand is stick to the fundamentals. It's time in the market, not timing of the market, and never ever sacrifice quality over quantity, which is the biggest trap that people fall into. Now, currently, there's a record amount of investors that have just come back in the market. And you can see that in Melbourne, for example, in terms of lending percentages, in Victoria, 32.2% of loans were done for housing commitments to property investors. So property investors now are back in a big way in Melbourne buying properties, but these are sophisticated investors that have equity and experience, not so much first-time investors. These are investors that have a lot of equity, they have the whole network set up, a lawyer, accountant, financial planner, mortgage broker, a banker, or both, and they've had buffers in place and they're waiting for the right time to strike. These are the best capital growth areas that occurred for the December quarter 23 and this is from Domain. And you can see there, these are some of the areas that they've been targeting. And they're interesting areas because some of them are high-end suburbs, some of them are not so high-end. So Fitzroy, 16.4%, median price 1.6 million. This is for detached houses. And by the way, people ask me this all the time. What are units? Units are apartments. Houses and townhouses are the same because there's a lot of townhouses built in Fitzroy that are bigger than the original Victorian properties in terms of square meters and size. So I've sold a lot of properties in Fitzroy, triple-story townhouses on a small footprint, but in terms of like the 3 bedrooms, 3 bathroom, double lock-up garage, they're double the size of some of the single-front Victorian properties and Edwardian properties that are everywhere in Fitzroy, and including the original terrace homes. So Carlton, Fitzroy, excellent area. The reason they're buying up in those areas is because there's very high rental yield there. Carlton, Fitzroy, Collingwood, especially, you've got massive increases in rentals. Therefore, the recent increases in interest rates have been nullified by that increase in rental yields. And investors are very smart investors are always hunting around for good rental yields. Burwood, 11.9%. Burwood's been really destroyed by the university campus there, by the TAFEs, Deakin, and so forth. So it's really become an area where every house is getting chopped up into townhouses. And this is Burwood towards not the Toorak end, it's the other side. So I'm talking about closer to Deakin. It's an area where you're also chasing yield, and I understand why they are, because you can put 4 students in a 4-bedroom townhouse and get a return of 7%, 8% rental yield, rather than, putting one family and then getting a return of 3 or 4%. So Burwood's been very popular. Maribyrnong, not a fan. Always overdeveloped. Wouldn't touch it. Chadstone now has become really boutique. In fact, I was blown away the other day, and I used to live in Chadstone in Atkinson Street, which is just near Atherton Road. Chadstone now is becoming really high-end. In fact, the same developers that are developing Malvern are now spilling over into Malvern East and Chadstone for the first time. So you're seeing townhouses starting now for $2 million plus. They're building high-end townhouses like they do in Brighton East and those areas, which have never happened before. Chadstone used to be a nothing suburb, just a home brand, boring suburbia. Apart from that little milk bar street of shops next to just on Atkinson Street, there is nothing in Chadstone apart from Chadstone Shopping Centre, by the way, which is massive. And I actually like the Chadstone Shopping Centre. It's we went there last year. I parked like 4 kilometres away from the car. I was in the shopping centre, and eventually, when I looked at my app, my car was 4 k's away from me. So it's like, where's the car? It's about an hour that way. It's too big. It's dysfunctional. So there's functionality. I think Templestowe is a much better. Or Doncaster Shopping Centre is a much better shopping centre, or even Southland. Chadstone, to me, it's like a massive cancer, just keeps growing, taking over suburbs. Some people like it. I just don't like it. It's too big. But anyway, going back to making money, we're not here to talk about which shopping centres I frequent or like. Chatson is really cool now because it's going double-digit growth because there's a lot of cheaper properties in Chatston, very boring older 60s and 70s houses on big blocks. They're getting ripped down and they're putting high-end properties there. You're going to see double-digit growth from Chatston for a long time. Mont Albert North, always in the top 10 best suburbs in Melbourne. It's not a surprise. So Mont Albert North, buy anything you can and hold it, never sell it. It's one of the top 10 best suburbs in Melbourne in terms of prestige, school zone, safety, proximity to the city, everything. South Yarra, South Yarra is overpopulated with apartments now. I mean, it's I used to love Chapel Street, but now there's just so many high density apartments everywhere, and there's so many people on those streets. I don't know. Maybe I'm just getting old and grumpy. It's just, to me, there's no attraction in South Yarra anymore. I'm honestly go to the Toorak end. But look, it's doing well. Land is very expensive because potentially you can buy an old townhouse or a house and eventually it's going to be redeveloped into high density towers you can clean up. Lower Plenty is pretty much a lifestyle change. People going away to Lower Plenty like they'd go to Donvale, Park Orchards, to get away from society, to get a big 6,000, 4,000 square meter block. It's beautiful there. It's green. If you're working from home, I don't even know why people live in Richmond in those areas. It's just, I'll be living out there as well. My office is in St Kilda, obviously. A majority of the stock that I sell is around the Bayside. But, if I was working from home in IT or something, I would be living in Eltham or Donvale, a big block with a swimming pool, tennis court and everything else. Why would you be in Richmond in a little shoebox with all the drug heroin addicts walking around because you got good coffee in Church Street, Richmond? Who gives a shit about coffee in Church Street, Richmond? I got the best coffee machine in my house from Italy. I make a better coffee than anyone in Richmond. So it's a funny thing. Bowen's been redeveloped really into the McMansions, in the French provincial McMansions. So it's got okay growth. Vermont South, massive blocks, massive subdivisions happening in Vermont South, and Keeler as well. Just value for money, big blocks, good amenities. So these are some of the areas that investors have been targeting hard in 2023-24. These are the top 10 trends that are shaping the Australian property market right now in 24. And I'm going to give you some idea why it's such a good time to get into the market. And it's always a good time to get in. People are asking, when's the best time to get in? Well, when's the best time to go to the gym? Whenever you can, right? It's not once a month for 10 hours. So remember, the most sophisticated investors have a plan of consistent implementation. Consistency over a long period of time will win than sporadic actions of high energy. So what I'm saying is, if you go to the gym 5 days a week, you're going to get more results than if you hit the gym once a month for 10 hours. Same with property. You just buy as much as you can whenever you can throughout every part of the cycle, but you focus on quality and the fundamentals. You don't go and buy sporadically, emotionally, because it's a hot spot and you just go all in, and I've seen people lose money. And for God's sakes, don't buy house or land packages in Melbourne. They don't work. Population change. The Albanese government has opened the floodgates to migration. Migration has peaked at 680,000 people, which is crazy. 56% of those people went to Melbourne and Sydney because that's where all the jobs are. So we're seeing a massive, massive increase in migration. The excuse is we're building government infrastructure projects and we need more skilled labor. I completely agree. I'm a migrant. I came over from Poland with my mother in 1985. So I'm all for migrants. Most of my friends are migrants. However, I don't think 500,000 plus is good policy. We have to bring less migrants in and build the infrastructure, the roads, the properties, the hospitals, the childcare facilities, the schools, and roll out that infrastructure so the migrants that come in actually can have a good quality of lifestyle rather than just opening up the gates, letting people in and hoping we can keep up with property builds, which we can't. That's why there's a deficit of hundreds of thousands of properties per year, which we'll never be able to catch up to. And that's something that's going to happen and it's going to drive the market. It's actually quite good. I was saying to a friend of mine when the Labor government won, I'm a Liberal supporter, is I should actually change my vote because every time Labor comes in, unintentionally, they destroy the economy or they impact the economy, I should say, to such an extent that property prices always boom. But every Labor government that's been in power since World War II has also coincided with the property boom market in Australia, but it's unintentional. They actually want the opposite effect. They're just so useless. The Penny Wong And the Albanese government is so useless because they've never run a business in their life that whatever they try to implement actually has the opposite unintentional impact on the market, which is why you're going to be paying more for new houses. And that's why you're paying for so much money in interest as well, because it is what it is. But anyway, I love them because I'm making a lot of money. It doesn't impact me. See, all my increases in petrol and food are offset by all my properties going through the roof. So I've got equity that I can't even know what to do with. So it's fantastic. It's great for landlords. I just feel bad for people trying to get into the market. And a lot of my audiences are people trying to get into the market. So net overseas migration, unprecedented in terms of what happened. The argument is, yeah, we had the lockdown, as you can see, the 2020. So we had no people coming in during COVID, and then we should let them all in. No, because during that time, over 2,000 developers and builders went bust. So if we let in all these migrants, even if we went back to the original volume, we haven't got the industry anymore to create the volume of houses that are required for these migrants. Because remember, if you've got 600,000 migrants coming in, let's say there's two per family unit, you need 300,000 new homes. We're already building 180,000 new homes per year. We're about 120,000 behind. It's huge. It's 12 to 15,000 per month in deficit. So they're going for established properties, and that's why the rentals are going up, and that's why you end up paying more for properties. Now, it's great news for landlords like myself. We have a lot of properties because all my properties are going up because they're getting pushed up by this inequality in the market. But, it's unsustainable. It's bad business. It's even bad for just traffic. I've noticed even driving around Melbourne. I do a lot of driving around Melbourne in my S63 AMG. Which I love. And I love electric cars because for every 10 electric cars, you're offsetting the carbon footprint on my S63 AMG. And I drive it not in eco mode. I drive it in aggressive sports mode, just to let you know, for all the left-wing woke people that are listening to my YouTube video. Not that you'll be listening to my YouTube video. Why would you? But anyway, just the traffic on the streets in Melbourne is incredible. During peak hour traffic, it's just there's so many cars now, not so much in the city because a lot of people don't work in the city, but just outside the city, in business parks, in various business centers, it's just becoming really congested. So we need to kind of be more strategic in allowing the volume of people that we have allowed to get into the country. I'm all for skilled migrants, by the way. So I am not here to say we don't need migrants. I'm a migrant. We need migrants. All my friends are migrants. Let's just be smart about it, guys. Let's just do a lower volume and let the infrastructure be built first, because they're going to have problems with kids not having access to schools, adequate childcare facilities, etc., etc. Immigration is a population growth. So this is another chart just showing you what's happening in terms of population growth, and it's off the charts, guys. It's off the charts. But natural population increases is stagnating. People are having less and less kids, because it's expensive to have children. So people are deferring having children. Death rate is going up a little bit because the baby boomers are now reaching the kind of 80, 90-year-old age. But, natural increase is on a decline because people are deferring children, having children later, focusing on the career. A lot of people see in the 80s, you hit 20, you save it for a few years, you buy a house or land package and pop out a few kids. Now people are waiting to mid-30s to buy their first properties because it's so hard to save a deposit, and they're having kids in the mid-30s, and they're having one child. A lot of people are having one child or two maximum. This notion of having 3, 4, 5 kids, unless you're in a regional town somewhere, or it's an accident, which happens, it's not going to be the reality for most people financially and economically. Overseas net migration, the normal amount that we should be putting in, like in my opinion, and you look at this data from 1900, look at 1950s, World War II finishes, and you can see there we've had 80,000 coming into the country. Now, 80,000 is not enough. Back then it was quite high given the infrastructure levels, but I would say 150, 160, somewhere around there per year is definitely manageable. And we can see there 560,000. So if you just look at that as a thing in itself, without looking at anything else, forget about interest rates, forget about GDP, forget about the economy, forget about even location advantages, right? People pay a premium for safe areas, school zones, all the stuff that I teach. It's just supply and demand, guys. 566,000, 600,000 people coming in, right? And we haven't got the houses, and people have to live somewhere. because you can't just live on the street. You can't be homeless in your car. The number one necessity for all these migrants is to secure a dwelling as soon as they can. Then they get a job, they sign a contract, they pass the probationary period, they save a deposit. A lot of them are bringing money over from China and India or other countries that are coming over with cash, but they can't qualify for a loan, and it takes about 12 months. Usually they need it to get their tax returns done here before they qualify for a loan, and then they buy the house. So you're going to see a massive, massive increase in housing demand by next year when this wave of migrants has come into the country, secured their jobs, and they're all high-income skilled labor. These are not guys that are doing fruit picking somewhere on the farm for 60 grand a year. They're coming in at IT jobs, 120, 130, 160, doctors, GPs, specialists. So they're coming in for high-paying jobs, which is great. And they're going to be in the market next year. So what do you think is going to happen next year when this bulk of people, a majority of them know rent money is dead money? Why make your landlord rich when you can make yourself rich, right? What do you think is going to happen when they're going to be coming back in the market and buying up houses and there's not enough new builds? They're going to be going into the pool of established properties. Well, it's just going to boom. It's going to go nuts and going to go crazy. You don't need to be a rocket scientist, or as W. Bush said, junior rocket surgeon, to understand that concept. So this is why we have rentals peaking and going through the roof. I mean, we've had rentals increase of 30%, guys, for townhouses, apartments, and houses, depending on the area. Some of the stock that I've been sourcing, because my story, I've always been targeting the Bayside area. So my office is in St Kilda. My favorite area to source properties is Albert Park, Middle Park, Port Melbourne, St Kilda West, Elwood, Brighton East, Brighton, and then right down the coastline, right? All the way, Black Rock, Sandringham, and definitely places like Mentone, Balmoral, Edithvale, Aspendale, Chelsea, Bond Beach. I don't like Carrum anymore. I think it's overpriced. Carrum was good 10 years ago, and I was doing Carrum up to about 7 years ago. I don't like Carrum now. And Patterson Lakes, forget about it. But before then, yeah, really good value for money. And then inland, I'm doing a lot of eastern suburbs, but especially waterfront properties and properties around the beach or within accessibility to the beach and good schools. The rentals for those properties has gone up just literally unprecedented, 20-30% per year, which I've never seen before, because normally rentals go up by indexation, maybe a little bit of a premium depending on the suburb, but to go up by 30%, so we're talking 700 to 1,000, 1,000 to 1,300. I mean, think about it. So those people are laughing all the way to the bank because those properties are cash flow positive, but it takes a specific level of knowledge to find those properties and target those properties. And by the way, house and land packages, they've done nothing in rentals because the market's oversaturated with house and land packages. So in terms of the index, in terms of rental yields, I mean, it's just been crazy for what's been happening. Great for landlords, really bad for tenants. And remember, there's always going to be tenants now that are completely priced out of suburbs where normally they could afford to live in, which is unfortunate. Dwelling approvals are down as well, record high for houses, apartments, and townhouses, because we've lost 2,000 builders. And remember, for every builder and developer, I mean, especially in Victoria, the problem is this: a lot of tradies have gone to Queensland during COVID, right? And I don't blame them, because all these builders and developers are going bust, they weren't getting paid, and they had nothing keeping them here, so they went to Queensland. Number two, a lot of tradies left the industry and got into government infrastructure projects where instead of getting 100,000 per year, they're making 200, 250 per year. So I know a lot of tradies, they were really experienced, 10 years plus in the industry. They go, why should I be stuck on the roof somewhere all day in the sun when I can go and work for the government for 250 grand a year without any skills? So we've had a big chunk of our skilled building labor force leave the industry and exit. Not only that, for every developer and builder that went bust, think about the casualties they took down with them. Think about how many subcontractors didn't get paid, the landscaping companies, the little guys, that were there, that were owing 20, 30, 40, 50, 100,000. They went down as well, and some of them have never recovered. So we have a real, I guess, hole in the industry that has not been filled. It'll take probably a decade to be filled. And the other thing is, kids these days don't want to become carpenters or sparkies or plumbers anymore. Don't want to develop an app and make $1 billion online, or they want to buy crypto that goes to the moon. They don't want to be, doing plumbing all day and crawling under houses. It's not cool to be a tradie anymore, like it was when I was growing up in the 90s. I remember in the 90s, like if you're a plumber or a tiler, you're on 140 grand a year, you're probably driving a Porsche or a Mercedes. Now, all these kids want to do apps, they want to be on social media, all these other stuff. There isn't this kind of, the culture it's very negative towards the trades, which is unfortunate. And I think we're going to pay for it as a nation, just with higher construction costs and materials and labor costs, which would translate to more increases in property prices. And that's why there's a combination of massive amount of people coming in, dwelling approvals are down, right? For those reasons, because we just can't create the volume. There's a lack of confidence in the market as well. So people are just buying what's available, and that's why prices are going up so high. Also, and this is the reflection of construction costs. If you look at 2018, when the index was 100, construction materials have gone up by 140% since 2018. I know developers, like I was talking to one of my developers, Derek from Corona Homes. He's doing a development in Chelsea on beach of the highway, just off Winburn Avenue. And he was telling me that he did another project 6 years ago, just next door in Winburn Avenue. And today it costs him 100%, 120% more in the same construction materials to build that new development. So what do you think is going to happen to prices of those properties? That's a big driver. So just replacement costs, guys, which is just the land and construction materials, is one of the biggest drivers of property prices, right now. Forget about all the other stuff. Just that is driving property prices. That's why people tell me the market's going to crash in Australia. It's always some foreigner business in the market, some guy in Germany or America looking at some chart. Oh, it's unsustainable. It's going to crash. Are you for real? You're not seeing all these things that I'm seeing at the ground level, and that's the biggest problem. And so dwelling approvals are down from their norm, record level lows. So got record migration, record low approvals, property prices going up, rents going up, record high, materials going up, and inflation's even tracking above what the Reserve Bank of Australia wants it to be tracking. That's why all these properties are going to go up. Now, just because everything's going up doesn't mean you should be part of everything. So I'm going to give you some really quick thoughts about apartments versus townhouse versus house and land. Now, I'm going to do another YouTube video just on these, and I'm going to unpack this in detail because I want to get into specific suburbs and areas. But for the purpose of this video, I just want to give you a quick summary just so you can get a bit of a taste of what's happening in these sectors. Apartments are a freaking disaster in Melbourne, guys. Forget about apartments. Avoid them like a Tina Arena concert or a Kenny G concert, right? In terms of the last 40% of all apartments that sold during December quarter lost an average of 6%. So apartments are just doomed in Melbourne. We don't want to live in apartments, guys. No one wants to be on balconies. And especially during COVID-19, people got trapped in apartments. It was very miserable, where people like myself, we had a massive, massive backyard. I had a gym, I had everything, swimming pool, which I have. And I was very comfortable. I didn't even suffer during COVID-19. I felt guilty. I should have suffered, but I didn't. I was really happy. Did a lot of powerlifting, enjoyed myself. I had a great coffee, great cinema room, big, massive backyard, very comfortable. So apartments, massive problems. Number one, they don't work fundamentally. There's no land ownership with apartments. I think they'll do okay with terms of like capital growth potential. Just construction materials alone are going up by 25% this year. And also because of the cladding issues and because of all the stuff with mascot properties in New South Wales, there's going to be a review of the type of, there's going to be a massive inquiry by the government into construction materials into apartments. So just construction and replacement costs is going to drive prices up by 20%, 25%. But really, they've done nothing the last 10 years, guys. We've got clients. I deal with 6 mortgage broking companies that I refer clients to. I had many mortgage brokers give me examples from time to time where a client bought a 2-bedroom, 2-bathroom, 1-car garage apartment in Docklands or South Bank for $680 10 years ago with water views, and now we're to a $650, and they're paying $4,000, per year in owners' corporation fees. I mean, what's the point? You might as well just invest in shares or like property being so difficult with contracts and all the stuff you got to do, there's no point just buying an apartment and hoping for the best. Yes, I've seen apartments in Brighton, Canterbury, very like boutique. Like there's 6 or 7 in the block. They've got courtyards. They're in the school zone. They're in a quiet court. They're massive, 3 bedrooms, 3 bathrooms, or 4 bathrooms, 3 car spaces. They've done well. They do 10, 11, 12%, but they're about 1.5 to $3 million. So the only reference of apartments going up in value are those ones. 1 and 2 bedders, disaster completely. Even 3 bedders have underperformed. So to me, stay away from them. House and land packages, well, we're just continuing to create new slums of the future in Melbourne. So you got 96 house and land estates around Melbourne. It's a disaster. If you watch my video on the Great Australian House and Land Trap, you'll explain what the issues are. We have extremely poor standards of planning in house and land estates. The infill ones are okay, like Doncaster Golf Course, for example, that's going to be fine. But the ones on the outskirts of the city, in all directions, by the way, so in every direction, so whether it's Point Cook, Trigonina, Tarneit, or north of like South Morang, or then your Berwick's and Pakenhams, they're a complete disaster, guys. They're a cookie cutter. Blocks are getting smaller and smaller. Now blocks are 500. The old blocks of 600, 700 now are 250, 280. The townhouses, basically, with a big 30 square home on them, they're getting hot because the roofs are all black. So the temperature is 6 to 10% hotter in the summer than normally. People are renting in there. There's crime. It's a disaster. Okay. And I'll do a lot of videos about this. And I can sell you house and land, by the way. I've got access to all the estates in Melbourne. If you want to buy a house in Point Cook or South Morang or Berwick and Pakenham, come to me. I'll sell you one. Because people say, oh, you're just begging them because you can't sell them. Oh, no, I can sell them. And I can sell them through the best developers in Melbourne. I just can't be bought, guys. That's the problem. And I don't bullshit. I know what the reality is. I drive through these estates every day. And when I drive through them, rather than going, oh, gee, this looks nice, go, what the hell happened here? And there are nice house and land estates. Some of them have done really well with trees. The problem is most of them, 99%, are completely dysfunctional. And you're going to be paying for it. You're going to have gangs roaming those suburbs, which is already happening. And there's no opportunities for kids, and they're going to be breaking into homes and cars. Not a good thing, guys, unless you want to be in a world of pain. And I did a video on this called The Great Australian House and Land Trap about Tarneit and Trigonina, because I had so many emails about this topic. Every time I do a video about Trigonina, Tarneit, people email me, oh, we bought a property in Trigonina, and I don't care, okay? Because if you bought in Richmond or if you bought in St Kilda upon Melbourne or Yarraville, you would have quadrupled your money, okay? The problem is that these areas are dysfunctional. And so in this video, it's not even me talking about it. I have locals talking about how bad the areas are. So if you guys ever want to buy a house or land package in Melbourne, I encourage you to watch this 1-hour video on my YouTube channel from a year ago explaining what the traps are of that. And by the way, if you still don't believe that, then come to me and I'll sell you one of those beautiful house and land packages. Whoever you want, metric on build, but I guarantee you're going to get 4%, 5% growth just at indexation. You'll never get beyond that. Townhouses are it, guys. Townhouses are it because you're building a property in an established suburb with all the infrastructure, transport, schools, prestige, proximity to city, water. You're not paying land tax. Remember, land tax is a killer now. If you buy 1,000 square meters of land, right, it's going to, with an old house on it with 2 or 3% rental yield, it's going to kill you. You can't mathematically buy 10 old houses on big blocks anymore with current interest rate at 6-7% and land tax where it is. Remember, if you're buying a townhouse in let's say in Doncaster, you're buying 1,000 square meters of land for 1.5 million. Or you can buy a nice townhouse for 1.5 million, 100 square meters of land. Now, people say, well, why should I buy for 1.5, 100 square meters of land in Doncaster where I could buy 1,000? True. And the house will outperform the townhouse as comparing assets. The townhouse will do 7%, the house will do 10%. But if you want to buy 10 of them, you can't mathematically buy 10 old blocks with old houses on them because land tax will kill you. You got a 10-to-1 ratio just with land tax because each townhouse has a very small footprint. So you can put 10 townhouses on 1,000 square meters. Plus, your townhouse gives you high depreciation and high rental yield. No one wants to rent an old house in Doncaster with 3 bedrooms, 1 bathroom, and smells like a dog from the 60s with green kitchens, right? The rent yield's 2%, but the townhouse will give you 4.5%, 5%. That's why mathematically, see, it's all a question of finance. And this is the reason why I do my live events. People ask the wrong question. They say, what's the highest performing, the best performing property in Doncaster? Yeah, it's an old block with an old house. That's not the right question to ask. The question is, what kind of property in Doncaster can I buy that will enable me to replace my income over 10 years? And the answer is a townhouse. See, one is a financial question, one is a capital growth question. Remember, a finance strategy will always override a property selection strategy. I'm just choosing Doncaster because it's like a average upper middle class suburb. It's a great area to source in. I'm a fan of Doncaster, Templestowe since day one. No problems, sourcing. So where we are in the property cycle at the moment, remember there's a peak of the market, decline, bottom of the market, growth of the market. And remember, I know I sound like a broken record, guys, but I'm doing it for your own good. It's always timing the market, not timing of the market. But we were at the bottom. We've moved now. In fact, in January, when I did this update, you can see that it's from January 24. We were at the bottom of the market. Now in March 2024, we are, in fact, at the state of recovery. Same with April, by the way, no change. So we're at 7 o'clock on the property clock, going up to 9. Now, most of the growth will be from 9 to 12. From 9 to 12, you're either going to have property or you'll be wishing you got properties, because that's when the craziness occurs. That's why I get my popcorn out and I just watch all the people bid at everything and buy everything at crazy prices. And I ring up my bankers and increase my lines of credit. So I do what's called counter-cyclical investing. At the peak of the market when everyone's buying, I'm refinancing, locking in my lines of credit. At the bottom of the market, I'm buying properties based on fundamentals, because the fundamentals don't change. As I said before, it's lovely to buy at the bottom of the market if you can. Lovely. No objection. But it's not a sustainable strategy, because if you get there, if it's only the bottom that you buy, you might get there. You won't be able to get the same amount of money. You'll be maxed out potentially, like we were, 6% interest rates. We could have bought at 1.9% and fixed for 10 years or 5 years. So if you're waiting for the bottom to materialize, you'll be waiting for the rest of your life. I've never met one successful person that has managed to time the market and create a strategy out of it. Yes, every one of us, if you've been in it long enough, I've been investing now for a long time, you will hit the bottom many times, but it's not a sustainable strategy. It's not something that you can do. And once again, remember, all the doom and gloomers were predicting the market's going to crash during COVID. And what happened in 23, December 22 and 23 picked up again, and it's going back again. It's always the best time to buy at the bottom. But remember, inflation now is forecasted to go down. We're going to see interest rate cuts by mid-year to late this year. No one's got a crystal ball, but I think there'll be a number of cuts towards the end of the year. And definitely next year, 25, there'll be interest rate cuts. And then the market will be stimulated again. But the biggest stimulation will be not only just interest rate cuts and people coming into the market because rentals are so expensive, and why make your landlord rich? You can become rich. It's those 600,000 migrants that are going to be passing their probationary periods in their jobs. They're going to be getting their first mortgages to buy their first properties. And a lot of them won't be going into Point Cook or Berwick. They're going to established areas, Elwood, St Kilda, Port Melbourne, Clifton Hill, Richmond, Yarraville, right? Boutique suburbs. They're going to be working from home. And those areas are going to boom on the back of this recent migration flood. And you're going to be the part of it. You're going to be watching the whole craziness occur. Now, remember, the market has a psychology of cycles. This is actually from the stock market, but the same thing. We have at the bottom, we have disbelief, right? And then hope, recovery is going to happen. Optimism, oh my God, the market's going up. Belief, time to get invested, right? And then I'll buy more. Yes. Euphoria is at the peak. Everyone's an expert at the peak, right? Because whatever you buy, you're going to make money. This is where the stories come out. Well, I bought in Trigonina for 290, now it's worth 600. Yeah, but the opportunity cost is that you could have bought in other areas that have outperformed that suburb. Because remember, it's all about opportunity costs versus one versus another. Then the market has a correction, okay? And then people go, oh my God, what's happening? It's going down. Anxiety, denial, panic, sell, jump out the window, and it goes back up again. Dollar cost averaging, guys, it's an old concept. I stand by it. Buy whenever you can buy because it's so hard to get a loan. It takes so long to get equity released. You got to get the valuations. You got to get mortgage stocks. It's months and months. Every transaction that I've done over the last 27 years has been painful. It's always, oh, they want more pay slips, they want more tax returns, they want this, they want that, trust deeds. So remember, it takes so long, so many months just to get equity release, and then it takes months to find the property, and then it takes 90 days to settle minimum. One transaction could be six months, even more. So property is something where this timing of the market is irrelevant. It's about just consistency, buying as much as you can, and when the market goes up, providing that you stuck to the fundamentals, like all my clients have done, you're going to look really smart. You can be at the restaurant and say, "Did you know we bought in Carlton for 700,000 and it's worth 1.6 now?" Really? Oh my God, you're so lucky. You can be one of those people. Now, in fact, what's happening at the moment is the last 12 months, this is why I say stick to the fundamentals, the top 10 earners in Victoria have been blue chip. And these are suburbs where people have made more money in 12 months in capital gain than the income they're earning in the suburbs. So every suburb in Australia has a per capita income earning ratio or amount, and then you have capital growth. So in Toorak, for example, now, by the way, people live in Toorak usually have trusts and business structures and various other structures that hide the true income that they derive, but there's the amount that they declare. So in Toorak has gone up by 237,000 in median price. Canterbury, 160, which means that 160 is greater than the average income of a person in Canterbury. Bowen, 156. South Yarra, 136. Surrey Hills, Mont Albert, Willis Hill, Bowen North, Middle Park, and Park Orchards. Stick to the fundamental suburbs, guys. You can't go wrong. These are not the sexiest suburbs. They might not be the hotspots, but they are the best suburbs in Melbourne for long-term gain. And that's why the smartest people stick to the fundamentals, stick to the brand name suburbs. Forget about these hotspots. I always get these articles about hotspots. Like, have you ever been to that area? They're always written by some person from Brisbane or from some girl that's 19. It's never even been in the market. Remember, there's 4 types of property investors. Which one are you? There's the analytical compulsive information gatherer, usually coming from a technical industry like engineering, science. These investors will spend months conducting market due diligence. They've usually watched the market for 5 or 10 years. A lot of engineering people, analyzing charts, crunching numbers, and then the market doubles and their serviceability gets destroyed. They don't buy anything. They usually end up paralyzed due to over-information overload. Analysis paralysis, I call it. You've got to break this habit, guys. You just got to stick to the fundamentals and take a leap of faith and get in. There's also the get-rich-quick gambler, which I'm really concerned about. I'm seeing some of them. They just want to get in, and then their background is multi-level marketing or alternative medicine. There's always some potion that no one knows about, but they know about it. It cures cancer, makes you look like Elvis when he was 20. But no one knows about it except for them and a couple of other people. But it's going to be the big thing, always the biggest thing ever. It changes the whole world, except it doesn't. 25 years ago, I was invited to these companies. Oh, it's the biggest thing. It's going to change everything. And then 20 years later, no one's even heard about it again. And the company's deregistered. Alternative energy healing, fitness, green drinks, and they love conspiracy theories. They love Bitcoin. They love anything new and shiny, right? And they will just jump onto hotspots. They're going to hotspots and they'll end up buying in Chinchilla and Newman and lose all their money. So you've got to, I think it's a question of education as well, and also delayed gratification with these people. The comfort zone investor is majority of investors out there. 72.8% of investors in Australia have one investment property and one house. You live in Bentley, and then you buy a house in Bentley East, 4K from where you live, so you can drive around. Every time you go to work, you drive by the property. It's roughly the same property that you live in. You live in a 4-bedroom brick veneer property in Bentley on the 700 square meter block, and you buy Bentley East for 650 on the 650 block, roughly the same as your property, and that's it. No depreciation, no strategy, nothing. Just but we know Bentley is a good area. It's a central road, it's a good schools. Yeah, fine. But that's not a strategy, guys. That's just you just bought something. So most people buy a property within 3 or 4 k's of where they live, so they can keep an eye on it. So if they're driving by the property, they can go, "Oh shit, it's gone! Honey, the house is gone. It's just an empty block. Like, number 16's gone. It's just there's two houses. There's nothing. Someone took it overnight, and they took it. They disappeared. There's no advantage, guys, of driving around your suburb that you're investing in. You got property managers and Google Earth. Being there physically doesn't add value to the property. Okay. So don't invest in your comfort zone where you live unless it's a good area to invest in fundamentally. Okay. So if you're living in, I don't know, Richmond, invest in Richmond. Okay. Even though I hate Richmond as a suburb. If you're living in St. Albans, don't invest in St. Albans. Okay. It's not a good area for capital growth. Nothing is going to happen in St. Albans. The attractive the active, I should say, they could be attractive as well, but the active savvy property investor is 0.9% of all investors that end up owning more than 6 investment properties. They're the ones that develop a system. They're the ones that get educated, they get the team behind them, and they create a system of investing, and they're the ones that win the game. And that's all it's all about, guys. That's why I run my live events. I write my books. I do this YouTube channel because I want to teach you a system methodology. If you haven't got a system, you are planning to fail. And they're the ones that I want to work with. So if you want to work with me, I'm definitely open to having a discussion with you about helping you build your property portfolio. Ultimately, this is what most people do. Hear no evil, see no evil, speak no evil. They just sit there and watch the whole market go up again and hoping for the correction that will never eventuate. Remember, the smartest investors are back in, guys. 32.2% of loans have been written to property investors in Victoria. They're back. Question is, are you going to be one of them? Are you going to go from where you are now to the level where you need to be in order to take your slice of the action? So I hope you enjoyed the video, guys. If you're interested in learning more, a couple of things. I'm running live events again in Melbourne, in my office in St Kilda, from time to time, called the Real Estate Investing Fast Track Weekend. They do book out very quickly. They're $47 per ticket, and you get my hard copy of my book, Australian Real Estate Investing Made Simple. It's a big book, 690 pages. It's a manual on how to build and structure your large property portfolio from scratch. And I do cover a lot of chapters in my actual 2-day event in my office. Things that we'll be covering, just to give you an idea, is you'll discover advanced property investment strategies and learn specific real estate finance and due diligence methodology that will give you the confidence and skills to start building your property portfolio as soon as you leave the event on Monday. On Monday, you can be in the market and know exactly what to buy, where to buy. I'm going to give you an insight on how to understand property cycles, state by state, exactly how to hone in with laser-like precision, Melbourne hotspots in 24 and beyond, how to identify and distinguish between the right type of properties to invest in, i.e. house and land, townhouses, apartments, also how to pay your mortgage off in record time and use the equity and savings to build your property portfolio in your spare time, and also how to best structure your first, second, and third property investment in a way that can pay off your bad debts and you can keep focusing on accumulating good debts. Stephen McClutchy also will talk about things like DSR ratios, how to understand the formulas the banks use to work how much money you can borrow. We're going to cover 18 ways to supercharge your borrowing capacity. And this section by itself is priceless because you only need one way, one distinction that will teach you how to go to the next level to get a loan. You know, it's not about learning 50 things at these events, guys. People walk away with 1 or 2 distinctions that make a huge impact in their life. 1 or 2 things can change everything, not 50 things. I'm going to teach you how to pre-qualify your mortgage broker. So 19 critical questions to ask your mortgage broker to work out whether they're good or not. And most mortgage brokers in the industry, I would say, are terrible to average. There are some good ones. We know them, and I'll show you how to find them. You'll learn the 12 most commonly deadly mistakes in finance that people can make all the time and how to avoid them. And then how to structure and balance your property portfolio between cash flow positive and negatively geared properties, plus much, much more. So these events are tickets are $47. You can upgrade to VIP if you like. You also get the home study as well, online video course, which, by the way, you can access for free right now. If you go down to the link below, there's a link below which gives you instant access to that online education. You will get a copy as well by going to the event. You get a more recent copy version. And this is 10 hours and a major and a manual. I think it's 400 pages. So that's a really good one. It depends on which one we recorded because they're all very different from each other, and some of them are shorter, some of them are longer. So you can get access to that right now, 10 hours of video and 265-page manual. Also, if you're interested, for some of you, you can have a 60-minute strategy session with myself. You don't need to go to the live event, but I encourage you to at least watch the online video course where we can take an idea, develop into a plan, and develop into an action plan. Because remember, most people die with goals. They never actually implement them, which is unfortunate. And the plan is everything. If you fail to plan, you plan to fail. So you want to make sure you have a whole team around you that can actually take your plan, your idea from concept to implementation. Most people spend their life going from A to B like this. They waste so much time. And remember, once you get to 65, guys, it's very difficult to borrow money. So you want to get a lot of money in your 30s and 40s and then kind of take it easy in your 50s and 60s and consolidate. You don't want to be taking too much debt and risk in your later years because if you go under, you can't come back, okay? If you go bankrupt in your 30s, 7 to 10 years later, you're back from zero with all the experience, which means you can still rebuild. But if you go bankrupt at 65, 70, you're probably never going to recover. So I'll show you how to get from A to B with the least amount of effort, maximum efficiency. So you get an hour consultation with myself where we work out where you are, where you want to be, and I'll give you some feedback about how to get from A to B. I'm also giving you an introduction to my mortgage broker, accountant, property lawyer, conveyancer, quantity surveyor, insurance broker, property manager, financial planner, my whole team. So I'll give you my whole team. This is some of the team that I work with here. And having a team is one of the most important things you can do as a property investor. Without a team, without a good financial planner, a good mortgage broker, you're going to find it very challenging to build large property portfolios, especially a good accountant and a good mortgage broker. You really need to deal with people that are themselves very successful investors and multimillionaires. Stephen McClutchy and James Black are some of the best mortgage brokers and accountants that I've ever worked with. I've known Stephen now for over 25 years, James 21 years. They've got lots of clients with huge property portfolios, and they're doing this all day long. They're the kind of people you need to surround yourself with if you want to become successful. So if you haven't got a team, I'll give you my team that I work with, and I've used them personally to build my wealth and build up my property portfolio. So you walk away with a real strategy, paint by the numbers, guys. It's foolproof, literally. Now, you got to qualify for the strategy. Very simple. You don't have to do any kind of special task. The minimum cheapest properties that I source are $695. So you got to have at least 95 grand as an individual borrower, because then you can kind of service 700,000. In fact, now it's probably around about 100,000 you need as an income. I don't have anything under 700 in Melbourne. It's impossible to build. No one's going to build anything under 700 that's worthwhile. So 695, 700 is like the cheapest entry level investment property that I can justify sourcing. If you're a couple, you need to be on kind of 140, 120 with a bit of equity. You need about 120,000 in equity to secure a property. So if you're interested in having a consultation with myself, free of charge, no strings attached, just fill out that form if you've been to a live event, or just email me directly, conrad@investorsprime.com.au, and just put in the headline, free strategy session and request, and I'll reply to you, and we'll book in a mutually convenient time. We'll catch up over Zoom, go through your situation, and yeah, happy to help out, happy to have a chat, and helping you build your wealth through property investing. It's been great, guys. Thank you very much for tuning in for this video. This is Konrad Bobilak. Subscribe to my channel, and I'll see you on the inside.